Hello, in this video I'm going to talk about one of the types of adjusting entries. I'm going to talk about prepayments, and here under prepayments we have two methods. We have the asset method and then the expense method. And for the difference between these two, the difference does not happen only in the adjusting entry but also in the initial entry. Because under asset method, there is a recognition of an asset. While for the expense method, there is a recognition of an expense. So let's say you have a transaction on July 15. And as I said, under asset method, there is a recognition of an asset. So let's have prepaid rent. That's the asset. And then if we try to look at the expense counterpart, a prepaid rent, we have rent expense. For the credit, normally you will be crediting cash here because there is advance payment of rent, and it's either you will record it as an asset under the asset method or an expense under the expense method. And let's say the amount of payment is 12,000. 12K. And this amount, 12K, let's say this is advance payment of rent for a year. And that's the initial entry under both methods. And as you can see, there is a difference. And that will also happen in the adjusting entry when we do the adjustments. By the way, the entries are correct. So we don't do correcting entries, but these entries right here needs to be updated at year end. And because of that, you will be doing adjusting entries. Assume that we are using a calendar year. So our adjusting entry date is December 31 in both cases. Now, why do we need to adjust the initial entry? Like, why do we need to adjust the one in the asset method and the one in the expense method? What's the problem? The problem with the record under the asset method, although the initial entry is correct, is that there is no recognition of expense at year end. I mean, from July 15 to December 31, where is the recognition of an expense? Because following the accrual basis, you know for a fact that there should be a recognition of an expense. While under the expense method, the problem here is that the expense recognized is too much. How come? Again, the expense recorded here, 12,000, represents 1 year. But you know for a fact that from July 15 to December 31, the date covered there is less than 1 year. So you need to work on the excess expense. Now let's go back to the asset method. For the adjusting entry, you need to recognize an expense for sure. Alright? So debit rent expense to recognize the expense for that year because that entry is nowhere found in the books. And then there is a corresponding credit to your prepaid rent to represent the deduction of the prepayment for that rent. Now, what is the amount of rent expense that we need to recognize for this year? To compute that, we need to determine the number of months that occurred from July 15 to December 31. So let's compute. So from July 15 to December 31, that's so 0.5 to complete July, August, September, October, November, December. So it's 5.5 months. This is the number of months that should be expensed this year. Now, how do we compute the expense for 5.5 months? We get the total amount, 12,000, divided by 12 to get the monthly rent or the monthly expense for the rent, and we multiply that by 5.5 months to get our expense for the year? The answer is 5,500. This is the amount of expense that you will recognize. There is a debit to rent expense to recognize the expense for the year, the expense for 5.5 months. While for the credit in your prepaid rent, this is just representing the deduction from your prepayments having used the rent already. Now let's jump to the expense method where the expense is too much. Your expense for the year is actually just 5,500, but you recorded 12,000. So for sure, you need to adjust the expense that you debited by doing a corresponding credit. So you credit rent expense. And then what you do is, for the debit, you recognize prepaid rent. Why? You need to recognize the prepayment to represent that you still have prepayment of rent the following year. Now, how do we compute the amount in the adjusting entry? So we all know that we recorded 12 months of expense already, but we only need 5.5. So if we get the difference of these two, we will get the excess expense for the year, and that's 6.5 months. This is the number of months of expense that we need to deduct to our initial recording of rent expense, such that our rent expense for the year would just be for 5.5 months. To compute, we get our total amount, 12K, divided by 12. So 1K times 6.5 months to get the excess expense for the year, 6,500. We credit rent expense by 6.5K. And then for the prepaid rent, also debit 6,500 pesos. Meaning, come next year, you still have 6,500 worth of prepaid rent. And then the rent expense is credited by 6,500 such that the resulting rent expense would only be 5,500. So it's like you recorded 12,000, right? And then you deducted 6,500. So if you do that, your resulting expense would only be 5,500, which is your actual expense for the year. But the major tip here is, if you're still trying to learn adjusting entries, you may want to prepare the initial entry first before going to the adjusting entry. That's my suggestion. But once you are used to analyzing the questions, you may now answer problems directly by just writing the adjusting entry. Now, another tip that I can give you is, if you are preparing the adjusting entry under the asset method, you are concerned with the expired portion. Another word for expired is used. While for the expense method, you are concerned with the unexpired portion. To elaborate, let's use the transaction here. So 12 months, right? You can divide it into two. The expired portion, which is 5.5, meaning the one that you used this year, expired portion. And then the unexpired portion, 6.5. That is why 5.5 is used right here, while 6.5 is used here. And this is another way for you to work on the amounts, because for the debits and credits in the adjusting entry, it's just logic. If you can visualize the initial entry, you know what to debit and to credit in the adjusting entry. So this is just a guide for you to determine the amounts. And of course, problems will not just be limited to 1-year transaction. Sometimes you will be given like 3 years. So let's say 36 months. And assuming that you already use 7 months within the year, meaning you still have 29. So when you prepare the adjusting entry under the asset method, you will be using 7 to compute the amount, while if you are using the expense method, you will be using 29. And now let me compare the amounts under both methods. They're actually the same. So let's use first the one under asset method, this one and this one. For the amount of cash, it's negative 12,000 because it's deducted, it's credited. While for the amount of prepaid rent, you have 12,000 minus 5,500, so that's 6,500, right? And then for the rent expense, that's 5,500. Now let's compute the one under the expense method, this one and this one. For the amount of cash, it's negative 12,000 because cash was credited. For the amount of rent expense, it's 12,000 minus 6,500, leaving you with 5.5k. And then for the amount of prepaid rent, it's there, 6,500. And as you can see from our computation, the amounts are equal because you have accounted the adjusting entry properly, given different initial entry. So with that, we'll try to solve some questions. Let's try this one. On August 31, paid 66,000 rent for 6 months. The bookkeeper debited a real account, gave the adjusting entry on December 31. Again, my suggestion is not to go to the adjusting entry right away. Let us first do the initial entry on August 31. It says here that there is payment of rent, so you know that cash is credited, 66,000. And then for your debit, it's either asset or expense. But it says here that the bookkeeper debited a real account. So it follows that your debit here is prepaid rent. Also, 66k. Now, what's the problem with this entry? Come year end, you will be doing the adjusting entry. So the problem at year end is that there is no recognition of expense. So you know that your debit here is rent expense, and then you will be crediting your prepaid rent. Now to compute the amount, we need to know the number of months that the company used. From August 31 to December 31, that's how many months? So we're done with August, September, October, November, and then December. So this is 4 months. And then to compute the amount, you first get the total. Divide this by, you don't divide it by 12 because you are only given 6 months. You divide it by 6 to get the monthly rent times 4, the number of months recognized this year, to get the amount of expense that you need to recognize this year, 44,000. And this is your amount in the adjusting entry. So this is your adjusting entry. And again, to elaborate on some discussion, if you are doing the asset method, because this is asset method, having recognized a real account, you are only concerned with the expired portion. This is the expired portion, right? Because given 6 months total, 4 is expired, 2 is unexpired, meaning you still have 2 months of prepaid rent come next year. So you are concerned with the expired portion. So let's have another. On August 1, paid 81,000 subscription for 9 months. The accountant debited a nominal amount, gave the adjusting entry on December 31. So I'll start by doing the initial entry first on August 1. So August 1, you paid 81,000, so credit cash 81,000, and the problem says the accountant debited a nominal account, meaning the one in the income statement. So your debit here would be subscriptions expense, 81,000. Now, what is the problem with this entry? Come December 31, you recognize too much expense. So it follows that in the adjusting entry, you will be crediting your subscriptions expense and then debit your prepaid subscriptions. Why? For the credit, I think it's self-explanatory. You recognize too much expense, so you are deducting at year end. While the debit in the prepaid subscription, this is to represent that you still have prepaid subscription come next year because you have an excess. Now let's compute the number of months from August 1 to December 31. That's so full month of August, September, October, November, December. So that's 5 months. This is the number of months that you actually used this year for subscriptions. But you recorded 9 months. You get 9 minus 5. So you have 4 months excess. And this is also your unexpired portion because you will be using this next year, having used 5 months this year. So to get the correct subscriptions expense for the year, you need to deduct 81,000 by 4 months, such that your expense for subscription this year would just be for 5 months. So let's compute the expense for 4 months. Let's get your 81,000. Divide this by 9. You need to use 9, not 12, because 81,000, that's for 9 months. Divide it by 9 months to get the monthly expense for subscription times 4, giving you 36,000. And this is your amount in the adjusting entry. So 81,000, that's 9 months, right? You need to deduct it by 4 months so that your resulting expense would just be for 5 months, which is your expense recognized for the year. Alright, so this is your adjusting entry. And again, if you can still recall my discussion earlier, if you are doing the adjusting entry for expense method, you know that it is an expense method because of this nominal account right here. You are concerned with the unexpired portion, not the expired portion, because this is the expired portion, right? But that is for asset method. Here you are using the expense method, so you are concerned with the unexpired portion, this one. This is the unexpired portion. So given 9 months of subscription, 5 is expired, 4 is unexpired. And since you are using the expense method, you are concerned with the unexpired portion. Again, let me just stress that you don't need to always prepare the initial entry. You only prepare it to facilitate the pro forma in the adjusting entry. But once you are used to the entries, you can just go straight to the adjusting entry. And then remember that when you are doing the asset method, you are concerned with the expired. And then when you are using the expense method, you are concerned with the unexpired. And that's it for this video.